I'm Charlotte McLeod with the Investing News Network, and here today with me is Brian Leni, founder and editor of Junior Stock Review. Thank you so much for being here online with me today.
Thanks for having me, Charlotte.
Yeah, it's great to be back with you. And unfortunately, we haven't had a chance to talk yet in 2021. This is our first conversation. So to begin, I wondered if you could talk about how your portfolio is done this year, any major successes you would point out, or overall how it's going for you.
Sure. 2021 has been much like the market. It's been kind of up and down. So over the course of this year, I've made, I think it's 6 picks. And of the 6, it's roughly about 1 per month. And we had a really good start to the year coming out of Q1. The picks that I made were up, 30, 40, 50%. And those have come right back as the market has kind of tailed off. And I guess it's to be expected. It's kind of across the board. One great success is a company called CanStar Resources. They've got a project, Golden Bay in Newfoundland. And they've been putting together some drill targets and then actually just started drilling about a month ago. And their share price is appreciated around 200% right now, I believe it is. And so it's been a great return for my readers, but it also has a lot further it could potentially go. And Newfoundland is hot. And, that was part of the premise of investing in them to begin with. And it has worked out pretty well.
Oh, that's great. And, you mentioned Newfoundland as a hot area. Are there any other regional plays that are coming to the fore this year that you've noticed?
Yeah, well, actually, I was talking about this to my readers about a month or 2 ago. And I think the next hot area play is going to be in Northern Ontario, specifically the Birch-Uchi sub-province, which is up, Red Lake and the kind of surrounding areas. And there's a couple of reasons why. First and foremost, I think that there's a great potential for discovery there. One of the interesting parts about that Red Lake area is that a lot of the deposits are found undercover. And the reason why that's important is because, this area has been, I would say, compared to much of like Ontario and Quebec, has been underexplored just because it is a little bit harder. The outcropping deposits that are characteristic of other parts of the Abitibi, of course, have been, explored and, deposits have been discovered. But it's probably taken these higher gold prices to really direct attention back to this area around Red Lake. And there's a couple companies that I think could really spur the market with a nice discovery, something like Newfound Gold has done with their great hits that they've had at their Queensway project. And so, I think that Uchi sub-province is going to be really hot eventually, or has the potential to be. And that's what I'm currently looking at, companies in that area.
That's interesting. And, talking about Northern Ontario, we had the Noront Resources deal, I think last week. They're focused on the Ring of Fire. The challenge has always been infrastructure there, I think. Do you have any thoughts on that and how that relates to what you've been talking about?
Oh, infrastructure is a huge issue. Even for the best deposits, infrastructure can be the make or break. And what I mean by that is you can go out there and you can discover, like, let's say, a high grade gold deposit. But the fact that you have to reach it by helicopter, powered by diesel generators, and possibly mine underground, these things are complications that can lead CapEx numbers up through the roof and really destroy much of the value proposition. And I think it's something that investors need to look at, specifically with the companies that I'm looking at. These are road accessible. They're near, power lines and existing infrastructure. So if there is a discovery made, it isn't such a big deal in terms of what the investor has to look at in terms of this. Could this actually be a mine? There's some really interesting companies that have helicopter access that are up in that northern part of the Abitibi, or specifically in this Birch-Uchi sub-province. And I think there's great potential there, but I think one of the sticking points down the road could be that infrastructure. And, right now, especially with the market where it is, I don't see the need to take that extra risk. So I'm kind of adjusting my investments accordingly.
All right, definitely really interesting. That'll be good to watch. I want to take you over to gold. Usually we spend some time talking about gold. Its performance has been a little bit disappointing for some people this year. So I wanted to check in with you about what you see as gold's main drivers this year and perhaps what may be holding it back if you feel that it is being held back at the moment.
It's a great question. It is probably the $1 million question right now, is where that gold price is going. It's the one I get asked the most by my readers. And I think it's probably, one of the most important questions out there. I guess the long and short of it for me is that I don't know where it's headed, in the short term, at least. Long term, I am very bullish on gold, and that hasn't changed. To me, the thesis is only getting stronger and stronger. These short-term turmoil or weakness, as we might coin it, I think is just what it is. It's just kind of turmoil and reflects kind of what is going on in the market. There's a ton of uncertainty, really, about which way the economy is headed. On the flip side, you've got inflation, which the inflation argument, which drives the gold, well, theoretically drives for us to have a higher gold price. And I think we've sort of seen that off the lows around 1700. It's bumped back up to 1800 and, held it for the last probably 3 weeks fairly strongly. But maybe not what other investors might think. With the inflation numbers that we've seen, some investors might think that it should be over 2000 gold. And I can't argue with that. But what I'll say is, it doesn't necessarily have to translate fully into that, because I think, in my view, I think there's a lot of strong points to say that we could see a lot of deflation on the horizon. The governments around the world are telegraphing a narrative that suggests that we might have further lockdowns this fall, at least in the Northern Hemisphere. The job numbers and consumer spending haven't been there. You've seen industries be completely damaged over the last 12 months with, how the lockdowns have unfurled. Restaurants, anything to do with entertainment, hotels, airfare, all these industries have been damaged. How bad is that damage? We probably don't know fully yet how badly these industries have been hurt. But what I would say is, without a doubt, they are going to change in the future. And I think, considering all these things and, the pull towards inflation or the pull towards deflation, that uncertainty, I think you're going to see the gold price kind of hover where it is until there's maybe a definitive move in either direction. But I think that's the great thing about gold, because I think in both an inflationary setting and a deflationary setting, we can see higher gold prices. And I think for investors, that's probably the most important thing. The flip side to it is, I'm more interested in the companies and what's happening with them and the value proposition in that investment. So I try not to guess where the gold price is headed and more focus on the price to value ratio.
Yeah, speaking about the gold companies, I've had a number of people tell me recently that although they usually like to look at the juniors, they're considering the producers more closely right now. So I did want to check in with you and see how you feel about that as somebody who spends time looking at juniors more often than not.
Absolutely. I think it's a great consideration, especially depending on your risk profile. A lot of people, in my view, think that they are down with high risk, meaning they're focused on the juniors and they like exploration. I think the moment of realization when they miss on an exploration company and they lose 50% of their money, I think that's the big eye opener for most people, that they don't like losing money. And I don't blame them, neither do I. But of course, I'm in a different position than they are financially in another whole other aspect. But what I would say is the producers and royalty and streaming companies are that low risk exposure to the gold market. And for a lot of investors, especially new to the sector, I think that's probably where you should start. You don't need necessarily, a graduate degree in geology or some of the more technical things that accompany junior company analysis. With the producers, if you've got a good grasp on balance sheets, or if you want to take something, a course or something on accounting, that can really focus your attention on how to look at a senior mining company or royalty and streaming company, and at the same time, lower your risk to failure. Exploration companies you're more apt to lose money than you are to make money. And coming to that realization for a lot of people might redirect them towards the producers, who right now I think show a lot of value, and at $1,800 gold are making good cash flow. And to me, I think that's a great avenue for most investors to explore.
Yeah, and you've kind of explained this. I was going to ask different criteria that you might have when you look at a producer versus an exploration company. Is there anything more you would say about that?
Yeah, there's a couple things that I think you have single asset producers, which of course, all the risk is built into that one mine. The one thing about political risk in mining is you can't move a mine. You can move a manufacturing plant, you can move other businesses, but a mine is set, it's in the ground, and you can't move it. So the political risk associated with single asset companies is much higher. So investors need to be more picky in most cases about where they want to put their money, depending on what their risk profile is. Secondly, like I had mentioned, to me, the balance sheet is probably your most important aspect of analyzing a producing or royalty and streaming company. Seeing what their free cash flow is, seeing what their debts levels are, and if they're able to service those debts, and where what it looks like moving forward, is probably the biggest aspect between evaluating that price to value ratio. And then, of course, there's the people. If you're able to pick out those good people, the Barracks of the world, Newmont or Agnico Eagle, good management, they're going to grow these businesses. Those are the people you want to align yourself with. And that's much like the exploration and development companies. But maybe those first two things, there's first, find out how many assets they have, and that'll tell you how big of a deal political risk is. And then secondly, make sure you can look at a balance sheet and figure out how healthy the company is and what it'll do in the future at this current gold price.
Okay, so gold producers potentially looking good right now. Of course, one criticism that they've faced in recent years is that they haven't done enough exploration to replenish their reserves. So I wanted to get your take on that and how we've seen them address that problem as we come into this better market for gold.
Yeah, well, it definitely is a problem. We've seen a huge, in that bear market from 2011 to arguably 2016, we've seen a real big lack of exploration. And it's a problem in terms of the senior company's growth prospects in the future. And really, I think that's going to be a huge part or theme in this next bull market, is exploration. Companies having to go out there and find new gold deposits, silver, copper, nickel, across the spectrum. We need more discoveries to replenish supply lines. And I would say senior companies have started making headway and back into the exploration realm by taking strategic investments in a few companies. And but I would say we've just nicked the surface of what needs to be done and what will be done. I think you're going to see a lot more M&A in the future, consolidation amongst the big guys, buying the senior companies, buying more of the mid-tier producers, and the trickle down effect where the best of the best undeveloped deposits get bought, and that's how they fill their pipeline. The exploration risk is the same no matter who's doing the exploring, whether you're the best explorer or the worst explorer. You have relatively the same odds, given that different properties are more prospective than others, but it's still, the odds are against you for finding an economic deposit, and that's the fact of the matter. So it'd be an interesting next bull market, how this stuff unravels and how that supply really builds up. A supply driven bull market are the strongest and the longest lasting, because it is so hard to find, develop, and put into production mines. So I think it's going to be a really interesting next, probably decade in the resource sector.
Right. And on the exploration side, not even just necessarily talking about gold exploration, but last year we saw a lot of companies able to raise some money. Are we now seeing this year that filter through into discoveries, or to what extent are we seeing that so far?
Yeah, well, one thing, I've got roughly half of the junior stock premium portfolio is with exploration companies. Yeah. And all those companies are well funded, and they've all started their drill programs in this drill season. We've started to see some results come out. To date, nothing spectacular, but these things take time, right? Exploration, most of these companies, it isn't just a one and done, where they're going to have to go back, retarget different areas, go deeper, step out. There's many aspects to it. So I think this is going to be more than a year in the making. But what you're seeing is backups at the assay labs. We're seeing delays across the sector for companies, especially in the hot areas like Quebec. Quebec is seeing a ton of exploration and a ton of work being done. And therefore the assay labs in that area are just backed right up. And so, some of that stuff is delayed. But yeah, you're seeing that money being put to work, and a lot of these companies across like the good jurisdictions, everything is in full force, and it's great to see, because I think discovery out of all that work that's being done is inevitable, and really that's what gets the market's attention and really gets the generalist, I think, excited to put their money into the sector, and that's what we need. We need to attract the general investor out there to come and say, what, I want to invest in this. I want to participate in this new discovery. And like I said, that Uchi subprovince, I think is going to be, or could be potentially exciting over the next 6 to 12 months, and might be one of those leaders in the discovery area. So.
Okay, yeah, important reminder about being patient. I know that's sometimes hard to do. I want to go away from gold right now. I know it's not the only commodity that you're focused on. So are there any other commodities that you're seeing opportunity in right now that you'd want to mention?
Yeah, it's hard. I've less and less am I focused on metals markets, and more am I focused on price to value. Mentors that I've had that have been in the business for a long time and have been very successful, have taught me to not get too preoccupied by metals markets and trying to guess where they're headed. And I've learned that firsthand. Unfortunately, I've lost money by focusing too much on the metals market and then investing my money in companies associated with that metal. And so I think I've learned that lesson. So for me, what directs my investing is the price to value ratio. If I can find value in a company, or a company that's selling for less than it's worth, it doesn't really matter to me what metal they're exploring for or developing. It's all about that price to value ratio. And that dictates, how long I'm in the stock, dictates a number of different things. With that said, I think the battery metals are next to gold, or precious metals. I think the battery metals are really appealing. Copper, nickel, probably even nickel more so for me. Nickel's been a metal that I've followed for a long time. I come from the steel industry. Stainless steel is very interesting to me, especially moving forward in the society that we live in. And I think that it's going to be kind of, no matter how we go here with the battery craze, I think nickel's going to be really important. The fact is that these deposits, especially on the nickel sulfide side of things, are hard to find, and they're deep. And those high grade nickel deposits, yeah, they're hard to find, and therefore they're going to require higher nickel prices to be developed. And I think that is what we're going to see over the coming years as batteries become more prevalent. And I think how stainless steel leaks more into our everyday lives, whether that be through cars, through your homes. I think there's going to be more of a push to increase the life span of the products that we use, and stainless is going to be a major part of that. And so, nickel is going to be very important. So yeah, nickel, copper, I'm very attracted to. But like I said, to me, it's more about the price to value ratio and how I look at companies and what I want to invest in. If you really like the metal, invest in the metal. If you want to speculate in the juniors, you find the juniors that are selling for less than they're worth and are managed by the best people who can form an action plan that's going to get market attention and raise that share price up to it realizing its actual value.
When you're looking at that price to value ratio, does your job get easier or harder in a better market or a worse market? How does that end up for you?
That's a great question, because it's hard. It's actually really hard, because things, especially in markets that are hot, let's take copper. There's a really strong narrative supporting copper, copper to the moon. And then what happens is there's investment across the sector, almost irregardless of the quality of the company. And you get some inflated share prices, and it's hard to find price to value ratios that I'm maybe comfortable with, considering that I don't want to bet on just the copper price rising. And that's where I've had problems in the past. And I think a lot of investors have fallen into the trap where, the copper price is going to 650 a pound, and then the copper price does nothing. And then these investments that they've made that require a higher copper price doesn't you never see it, and therefore you never get to extract that value. So for me, yes, as we get into bull markets, it is much harder for me to find companies that are investable. The other side to that is that also tells me that I need to be looking somewhere else. I need to be looking where nobody else is. I need to look at the stuff that people aren't interested in. Considering the whole narrative surrounding the resource market, it isn't that easy these days. But I tell you, the most value I see right now is in gold companies, specifically, gold developing companies, where the share prices have come right back from last summer, and the companies haven't seen really any material changes. And to me, that's where I see the most opportunity for maybe value investors.
All right, that sounds like a good point to wrap up on. But before I let you go, just want to ask if you have any other thoughts you would leave readers with, or perhaps let them know where they can find you if they want to learn more.
I would just say be patient. Let the market come to you. It's impossible to say where the market is headed, and so don't try to be a market guesser. If you find a company that's worth investing in, but you're uncertain about the market, invest in tranches. And by doing it in tranches, you lower your risk and you dollar cost average if that share price is indeed falling. I would rather give up upside to protect my downside. Finally, if you're more interested in my newsletter, I write Junior Stock Review Premium. If you go to juniorstockreview.com, you can find all the information about the premium newsletter there. And I welcome any emails anytime.
All right. Well, thank you so much for being here today. It was great to have you.
Thank you for having me, Charlotte.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Brian Leni with Junior Stock Review.